Was the money market really? I thought the money market funds were all cool and everything was fine now, right? Am I wrong about that?
Well, I mean, there's been steady outflows for as long as since 2008. And they are at risk to runs or the sudden deterioration of a particular stock that they might own, according to the SEC. So they want additional reforms to shore them up, or at least Mary Shapiro does. The industry does not. The industry thinks that there were some earlier reforms from 2010 that should be given some more time to work. But Mary Shapiro kind of thinks that the industry is living on borrowed time, that eventually there'll be another panic like the reserve fund breaking the buck.
Right, right. Sparked by Greece, right?
Yeah.
Let's talk for a second about these new plans. Mary Shapiro, the chairman of the SEC. What is the new proposal? What are the details on that?
Right, so it's basically a two-part proposal. There's a capital cushion, a bank-like capital cushion that will be coupled with a redemption, a withdrawal holdback, or a liquidity fee. So if you withdraw all of your money, you'll only get 95% of it immediately. The other 5% you'll get back after 30 days, and that's designed to prevent people from running at the first sign of trouble. It also would help. The SEC thinks that if you have this liquidity fee, that would decrease the amount of money that funds would have to raise as a capital buffer. There's a third proposal that would basically float the NAV, the net asset value of money funds. Right now they're pegged to $1, and the SEC is going to propose floating those. But it's not really clear that even Mary Shapiro supports that. The industry thinks that it'll totally destroy their business. And there is some support in the money fund world. Like Fidelities of the world have indicated that they would support the idea of a capital buffer.
Now, Andrew, is this in addition to with Dodd-Frank, the Financial Overhaul Act from July 2010? One of the things they did address there was money market funds. Is this in addition to the Dodd-Frank legislation, or is this kind of continued regulation stemming from 2010?
This stems from 2008. This isn't a Dodd-Frank requirement. A lot of people think that the SEC is focused solely on the avalanche of Dodd-Frank mandates, which are, I mean, that's taking up a significant chunk of their time. But this is a top priority for Mary Shapiro in what's probably her last year as chairman. There's this, and then there's a consolidated audit trail. That's her other big project, and both of those aren't in the Dodd-Frank law.
Yeah. Now, so we have this chart up here. You can't see it, Andrew. We have a chart up showing the size of the money market. It's down to 2.7 trillion. It looks like it was closer to 4 trillion a few years ago. You can see the number of funds have fallen. I mean, this is definitely a shrinking market. But you said the industry doesn't like these plans. Of course, they never seem to like anything the government proposes. What are the odds that the industry really can? Do they have the weight to scuttle something like this?
Well, then you get into political dynamics partly. So the commission, there are 5 commissioners, including Mary Shapiro. 2 of them are Republicans. The Republicans have already indicated they're opposed to any additional changes at this time. There's a Democrat, Luis Aguilar, who said that, I mean, maybe this is too much insider baseball, but he's kind of on the fence. And so you have to convince 3 commissioners to propose these things and these changes. I think Mary Shapiro is able to twist arms and at least gets these proposals floated. It's another question of whether or not they actually get finalized, given the industry opposition and the likely opposition from a lot of lawmakers.
Yeah.